this crisis is going to make the 2008 crisis look like not that big an event. Yes, it was. A lot of people had to leave their homes and everything else. I get that. But now they're going to be leaving their homes. They're not going to have food to buy. They can't afford their gasoline. There's a lot of things that are going on this time around, and there isn't going to be a way to print it out this time. And once the market recognizes that, you'll see a big shift between the equity market and the precious metals.
This week's special is 1 ounce silver Britannias for only $4.50 over spot. Here at Liberty and Finance, we are licensed brokers with Miles Franklin Precious Metal Investments. We are standing by the inventory, taking orders into the wee hours of the night and on weekends, because preparedness doesn't stop. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the silver guru, one of the top silver experts from the morganreport.com. David, thank you so much for joining us today.
Elijah, look forward to our conversation.
All right. Well, last time we had you on, we were reporting on, record high inflation numbers, and we just got another inflation report. It just seems to be going higher every month. It's 9.8% annually. Those are the official numbers right now. Your take on this, and also how the markets are reacting. It seems like we're seeing a sell-off across the board.
Yes. Well, first of all, the inflation rate is obviously quite high, and that's by official government statistics. I spoke with Greg Hunter actually yesterday, who's going to interview John Williams. I don't know if that interview is accomplished or not, but using the old methodology, inflation is actually much higher than that. In fact, by the old methodology where the CPI was determined, we find that I think it was 17%. Don't quote me, Elijah, but the idea is it's well above the 9.8. Which means it's actually higher than what it was in 1980, at least to my memory, and living through it. I think 13 something was the high before Volcker came in and pushed the interest rate so high it basically crashed the markets. We're seeing the markets crash here. Well, I maybe shouldn't use crash, but sell off. And the interest rates really have started to come up, but nothing compared to what Volcker did. What Volcker did was he took the interest rate at the nominal place where it was basically yielding zero based on inflation. So if you were getting, say, 10% or something on a bond or a mortgage, and the inflation rate was 13%, obviously you were really losing 3% based on the inflation of the money supply. What he did was he pushed it up to 20%. Or thereabouts, which gave a real rate of return of about 7%. So you're actually making money on your money. In order for us to do that, we would need to get the interest rates up to, say, 10%, and then you would have a 0.2% real rate of return. I don't think that's possible. To get the interest rates a lot higher than where they are right now, you wouldn't be able to service the interest on the national debt. So we're in a rough spot. I know everyone you interview basically says the same thing. I think the markets are reacting because they don't know what else to do. Uncertainty. And, I'm sure we'll get to the precious metals. I can just take off on that. So I guess I will. I mean, the metals are doing very similarly to what had happened in 2008. When the 2008 subprime mortgage crisis came to the fore, and these banks and mortgage companies started failing left and right, it took down the stock market, it took down the gold market, silver market, basically took down everything. And we're seeing a repeat this time. What's interesting to me, and I think I said it on your program some time ago, that looking in that same idea, what I noticed was that the sell-off in gold and silver at that time was not as significant percentage-wise as it was in the 2008 crisis, even though this crisis is far, far, far worse than what the 2008 crisis was, which means that the metals, although they're selling off, are anticipating that this situation is the place where you really want to be in the precious metals. So I follow that logic. I'm not sure you do, but what I'm saying is they're acting stronger than they did in the 2008 crisis, because this crisis is going to make the 2008 crisis look like not that big an event. Yes, it was. A lot of people had to leave their homes and everything else. I get that. But now they're going to be leaving their homes. They're not going to have food to buy. They can't afford their gasoline. There's a lot of things that are going on this time around, and there isn't going to be a way to print it out this time. And once the market recognizes that, you'll see a big shift between the equity market and the precious metals.
So it seems like what you're saying is the precious metals are acting stronger this time around. And I know we're at least very much seeing that in gold, where if you compare gold to the general equity market, I mean, the equity markets are down significantly for the year and gold is just down slightly.
It is. And it's hard to make the case that, he who loses least wins. But that's the case at this juncture. And I do believe, like in 2008, you will see a slingshot rebound where you see both the metals take off and regain some traction. And then once new buying occurs, then we will see the metals start to make new highs. Will that happen by the end of this year? I don't know. I feel strongly that by 2023, we will be seeing new highs in gold as a minimum, silver perhaps. But at the end game, nothing outperforms silver. Will it happen this time or not? We'll see. What I do know is that the best study done on it was called Silver, the Restless Metal. Professor Jastrom, I've mentioned before, Elijah, and he did the gold constant. He looked at gold based on commodities, and it did best in a deflation. And he wondered what silver did, so he looked at it under those same conditions, and he determined that silver does sometimes well in a deflation, sometimes not so well in a deflation, but nothing beats it in an inflation. Now, that book is several years old, published years ago, doesn't guarantee the future, but I certainly wouldn't be a seller at silver here. And one more comment on silver is that on the wholesale side, it's getting pretty tight. Now, I don't talk to every wholesaler and every refiner out there throughout Europe and the major dealers in the United States, but I still have a pretty good handle on it. And the market's price is not really reflective of how difficult it is to get metal in size. And last comment is they're moving physical silver, which I mean the commercial bars, from this continent to Europe. That doesn't take place unless there's a big need or demand for it, because shipping silver, as you know, work with Miles Franklin, is not cheap. I mean, a bar weighs around 70 pounds. So to ship a massive amount of those from across the ocean, that doesn't take place all the time. Usually what's in London stays in London, and what's in New York stays in New York, and they'll paper trade back and forth. But if you need the physical and you got to put it on a boat and ship it, it's saying something. So let me finish there.
Definitely. It does seem like, ever since the COVID crisis, really, we have seen a drawdown in supply. Do you see that? How do you see that playing out going forward if we do see a bottoming come in the next couple months for precious metals and then it take off again?
Well, that's what I see, but it may be wishful thinking. I don't think the metals story is over by a long, long shot. I think there's a lot more to the story. As I've said many times in broken record style, 90% of the move comes in the last 10% of the time. And I think we're going to see something similar this time around. And I really anticipate that by 2024, so 2 years out, maybe 2.5, I think we're going to see, record highs in both the metals, and a lot of people that will be joining the movement, the idea that, stock's bad, gold good. And of course, that is not in the consciousness of most investors at this point in time, but it will happen in my studied view. And I think hard to say, I think before the end of this year, you're going to see a lot more volume in the gold and silver markets than you have now.
Now, in your perspective, what should be people's strategies when it comes to buying at this point? Because we have seen quite a bit of a fall right now. Some people are expecting precious metals to fall lower, but other people are saying, take advantage of this dip here. So your perspective on that?
Well, there's several ways to approach it. And the main thing is to have a plan and stick to your plan. It's if you have a plan of dollar cost averaging, for example, and I'm going to buy precious metals for the next 3 years, and I'm going to buy it at $100 a month for the next 3 years, stick to your plan. So when the metals get crashed, you're buying a lot more metal for that $100 than you are if the price are high. But in a bull market, it's a good way to dollar cost average and get a good price over time, and it takes a lot of stress. So that's number one. The other one, of course, is what people want to do, and that is to pick an exact bottom, which is nearly impossible. And the problem is the psychology that goes into it. When you say that's the bottom and you buy, and then you find out it's gone even lower, then you're upset with yourself. You should have waited, and you're hesitant to buy more. So strategy there, really, what I've done, and seems to work well, is I make certain that the bottom is in. So let's say, for an example, silver bottoms at 1788 a week from Tuesday. And that's the low. And then it comes back up to, and trades are below 19 for a matter of weeks. I would look at the chart and I would make silver prove itself to me, which means I'd say, okay, I draw a horizontal line and I would say, when silver gets above 1880, this is based on, the future. And then when it gets above 1880, it has to stay there for 3 days in a row. Must be consecutive days, and it must be on higher than average volume. And if that occurs, then I can go ahead and buy silver. Well, David, you could have bought it at 1788. First of all, to think that you can buy it at that low is almost ridiculous, because the way the futures market works is when it hit that theoretical price, that theoretical spike low, there might have been 2 or 3 futures contracts that were bought at that price, and then it starts to move up, and the next bid offer spread is at 18. And that's the way markets actually work. And because of that fact, you cannot get these unless you just pure luck getting the low. So you want to buy within the buying range, and you want to sell in the selling range. I would say right now, Elijah, anyone that's bought at a 28 or whatever, you're feeling some pain. I understand that, but I think in the longer term, you're going to be fine. But if you're new or you want to average down, I would say anything under 20 in silver is a bargain. And again, you asked me 2 months out. I think 2 months out, we will be in a position where the metals prices look better. My only concern is that 2 months out, we might see one more big move by the Fed. Maybe they're fed up with themselves and they will raise interest rates, let's say 1%. If they did that, the market would react as it is now. Gold and silver would get hammered. You might see another big push down. But in either case, I don't see these push downs being long in duration. That's the whole point. And if your plan is, I'm happy buying under $20 silver. I know I'm being a little bit long-winded, but I'll just give you a real quick example. When we had the last big smash, March of 2020, I had plenty of cash on the sidelines. Now, I wasn't planning on the gold-silver ratio getting to 125. So I put a pretty substantial order in for physical silver the day before it hit the low of, I think, around $12. And I believe the day before it was somewhere around 14. When it went down another $2 or thereabouts, I called up my dealer and said, well, if I'd waited till today, how much money would I have saved? And of course, on the paper market, it would have been $2, obviously. But in the physical market for 100-ounce bars, the one I had committed to, I'd only save about 35 cents. So that shows you that the premium basically reacts to these market conditions when you're dealing in the physical realm. And having said all that, you could have bought it on paper. I did that in the 2008 crisis. When the 2008 crisis hit and eBay was selling silver at $13 an ounce, I called up a friend that works in the minting industry, and I bought 1,000-ounce bars and had them minted into 1/2 ounce rounds. In fact, I've shown them, I think, on your show before. So my net cost with the cost of the die, the artwork, the transportation, and the labor turned it out to be like $10 silver. But I have the Indian on the obverse and the Silver-Investor, my old website, on the reverse. And it was a lot smarter to do that. I was thinking of selling them on my site, but I didn't really want to get the reputation as being a metals dealer, because I'm not. I run a financial newsletter. So back to you.
No, and I think that's so interesting, like the different strategies there. And also you mentioned like picking a bottom it doesn't necessarily mean actually purchasing at the exact bottom. That's almost impossible, but waiting and getting in that general vicinity and waiting to show that there's strength to the upside and then purchasing is a very interesting strategy there. I did want to ask you about what we're hearing from the Fed, because it is interesting how, what the Fed does just impacts the markets so much right now. But we are hearing talk about a full percent rate hike coming soon. Your perspective, if you could expand for our viewers, what you see the Fed doing, because it seems like at least the narrative right now that they're pushing is we really need to get inflation under control, which I know it seems pretty much impossible right now, but your take on that.
Yeah, I think it's a game of chicken. I think the Fed wants to certainly give the markets the impression that they're not giving up on the dollar. They have to raise interest rates because of the inflation problem in order for people to have faith in the dollar. And if they give up and do a reverse, a pivot, they start to lower interest rates, that signals to the entire world that the dollar is doomed. It's going in the dustbin of history like every fiat currency that preceded it. And that's what they don't want to have happen, although that's the most likely scenario to take place. So they're caught in a bind, a rock in a hard place, and they're getting squeezed. I do think that it's possible. I want to add on to this. Bill Gross, well known as the bond king for a very long time, suggested that the Federal Reserve put the federal funds rate at 3.5% immediately, which would be almost two full points above where it is now. And, would that help? And it may. There is just this fine line. Do you either inflate the problem away and make the money currency worthless, or do you actually get interest rates high enough where you crash the bond market? Now the yield curve gets changed so dramatically that those people that have $1,000 face value on their bond now are only able to get $580 for it because they have to sell at a discount for that bond that's at 1% to yield the same amount as the current market rate. And that, of course, is really the most ethical thing to do. And it would say that the US dollar is being saved and it actually has value and it can continue. I doubt that will be the case. Although I don't rule it out entirely. I'm probably one of the few analysts that will say that. I don't rule it out entirely. I mean, if you look at the worst case scenario as far as pain is involved, that would be it. But it actually is a better solution than going the route of Weimar Republic in Zimbabwe and Argentina, where the crisis is a currency crisis and people don't have faith in the currency at all. And there's lots we could talk about. I mean, there's talk about the BRICS currency, and there's talk about, a gold-backed yuan and all these things. But they're all out there in the thought process. Nothing definitive has been put or proposed other than a central bank digital currency, which is the same fiat fiasco, only with more control.
It does seem like, it's the same exact situation. And it just, it gives the central bank more control and more ability to inflate the money supply. And it doesn't seem like I don't see how that can really be a solution in any way.
It's not. I mean, that's why, that recent interview I did, I called The Great Reject. Most people don't really understand money or how it works or why inflation occurs or any of that stuff. What they do know is it costs more to live, but the financial markets understand it. And that's why I think it'd be more difficult to pull it off than they suspect. They just, we're in power. They're quite arrogant for the most part. And they'll just say, we're implementing this new system. Here it is, like it or leave it. Like it or not, that's the way it's going to be. But it may not have the adoption that they think it would. And even if it had a fairly significant high adoption rate, you're talking something that complex, I think there could be, glitches in it. And you don't know who's, behind the scenes doing the software programming. I mean, I know this is a one-off, so I'll put on my tinfoil hat for you, Elijah. I'll fully acknowledge it. But if you had someone that was, let's say, libertarian bent for freedom, they might be able to write an algorithm that was just slightly tweaked that might mess things up. And then, of course, they'd have to go in and refix it. Or that could happen in a non-deliberate way. It just occurs because, the software checker that checked it with another computer didn't find the split. So there's a lot behind the scene. I know I'm going deep in the thought process, but my point being is I'm not as concerned about the central bank digital currency as many are. I think something larger is at stake here, and that's for the powers that be to remain in power. And as we see these governments start to crumble, we're going to see people come together in a less and less populous manner, meaning that there's going to be smaller and smaller groups where it's your basic community outward rather than these great big mega states or globalism. Globalism, to my thinking, is really failing right before our eyes. And so what does that mean? It's going to be nationalism. Then nationalism goes down to statehood in the U.S. and then the cityhood and then neighborhood. I mean, it starts to combine downward, not upward, not where there's one ruler and one currency and one government. It goes the other way where there's multiple communities within a given landmass, for example.
It does seem like regardless of what kind of currency system we have in the future, owning precious metals will give people a leg up. One, because they have something of real value, but two, it also helps them, stay outside of the system and protect their liberty in that way as well, regardless of whatever system comes next.
Absolutely. As you know, I've never perfected the article I want to write. I mean, I've written about it 3 or 4 times that there's a direct correlation between honest money or sound money and freedom. And I've expressed that, but I've never got that point where I thought it was an aha moment where I could help wake up, so many more people that they get that moment, that light bulb goes off above their head and I get it now. Now I know why I want precious metals. And I haven't accomplished that. I'm not sure I ever will. Those in our community, as small as it is, understand it. But once the system fails, there'll be a lot more people that understand it, only they won't have the opportunity to preserve their wealth from what's coming.
Well, that's why we're here, to help people be aware and prepared and get as many people prepared as possible before this all comes down. But David, we really appreciate your time today. Before we let you go, where can our viewers find you if they're interested in learning more, and if you'd like to share any last thoughts for our viewers?
I would just go, as I've said every time, to themorganreport.com and get on our mailing list. We're pretty well shadow banned, but that's beside the point. The other thing is that we started writing on Substack, and I'm not even sure I said it in a video recently, but if you just go to Substack and you type in The Morgan Report, it'll pop up. So this is free information for everyone. I don't put comments on my videos because I just don't have time. But in the Substack, I think you can still comment. I'm not sure I'll personally answer the comments, but I've got a staff, and we'll probably go ahead and do our best to keep up with the comments in that forum. So something new that is out there as a public service to try and help people realize we are going through trying times, but there are ways to mitigate it for you at a personal, family, community level.
All right. Once again, David, thank you so much for your time, and God bless.
God bless you. Thanks.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.